if we cross this line, this zero line within the next 4 months, I guarantee you the Fed will reverse course. And I believe that reversal will be the last reversal for this monetary system. Hello there, my friends. Rafi here from the Endgame Investor with this week's silver report for Arcadia Economics. And it's been a rough week, but I'm going to share with you several signs of why it looks like the bottom in silver is in again. And we've had many bottoms since 2020, 6 in fact. And we just cannot get below the 2008 high price of $21.41. And it doesn't look like we'll be breaking that price point this time either. Physical premiums remain extremely elevated, even though the spot price is stable. Open interest appears to have bottomed, and the amount of time until the Fed is forced to reverse its quote-unquote tightening monetary policy is closing in, and I believe is only months away. This video is sponsored by Fortuna Silver, which has just expanded its share repurchase program. Pursuant to the share repurchase program, Fortuna is permitted to repurchase up to 14,608,000 common shares, 5% of its outstanding 292 million shares as of April 27th. So the company is embarking on a purchase program about 5% of its available shares. And remember that dividends is not the only way that miners can return money to shareholders. Let's begin this week with a look at open interest, which means the number of contracts open on the futures market. This chart here from Gold Charts R Us shows the silver price in blue on the first layer, the first level here on top, and below in the middle, you have open interest, the amount of contracts that are open on the COMEX in silver futures. You can see here that we have reached a bottom, a post-2020 bottom. This is the March post-COVID lockdown bottom over here. And it's about at 137,000 contracts open. You can see open interest collapsed from about 240,000 to 137,000, almost cutting itself in half. We reached that number again over here when silver bottomed at around $21.41. And we have seen that bottom again at around the same amount of open interest. This means that those that are short contracts have covered as much as they can usually cover, and they are not going to be covering anymore. Instead, they're going to be selling contracts. And if they're going to be selling contracts, they're going to be looking to mark those contracts higher, which means that silver futures are headed higher from here as determined by open interest patterns. How long this will be sustained is unclear at this point, but open interest has to head higher from here, and with that, the price typically goes higher. Here's another sign of a potential bottom besides the open interest figures, and that is the silver to commodities ratio. It looks like we might have a double bottom in place at 0.071. This is silver in commodities terms. This has been a long and sustained decline. We have to look for a trend line break over here, which should be at around 0.09. If we can overtake that level, we should be in good shape. But this next chart I'm going to show you shows why the Fed's days are numbered in terms of its monetary tightening cycle. I think we are only months, if not weeks, away from a Fed reversal. Here's why. This is a chart I do not publish very often. It is the quarterly annualized rate of actual inflation. This is money supply inflation, how much more dollars are going into the banking system, into the economy on a yearly annualized basis. You can see here, obviously, this is the COVID 50% super hyperinflationary peak spike. And from there, we've been trending down, and we are at around 4.71%. Now, this chart is important for one big reason. Every time that we hit the zero mark, this is the 0% mark. This means the rate of actual inflation is 0%. And when the rate of monetary inflation reaches zero and reverses, you can see here, we slightly dip below zero, which means the money supply was actually shrinking on an annualized basis. This is September 2008, just before the major stock market crash of that time. Here you can see we also went below zero, but that was 2009 and stock prices were already way below what they were over here. Here is the August 2015 flash crash. You might remember that as Black Monday, August 2015. And now we are headed down. Usually seasonally, this rate bottoms at around August, September. We are now in May. June, July, August, September is 4 months away, and we are trending down, which means there is a high probability that we could enter below zero territory. And if we enter below zero territory after all of this monetary inflation from here, stocks are going to be in big trouble. If we cross this line, this zero line within the next 4 months, I guarantee you the Fed will reverse course. And I believe that reversal will be the last reversal for this monetary system. So we could be within 4 months of the explosion in the monetary sphere. And when that happens, the first asset you want to be in is silver. The second is gold. On the way to crossing this 0% threshold, it could get rough. I don't know where everything is going to go. But once we cross there and once the Fed reverses, that is when I believe the end game kicks in. Now, granted, the last 2 or 3 weeks have been rough for the silver bugs. However, some perspective, look at silver and yen. The yen has been in collapse, and silver is above 3,000, or is it 3 million yen, or 300,000? I don't know. There's so many zeros in yen. It's confusing to tell. Silver is at a post-2011 high in yen terms, and this tiny little blip down is what the Japanese have experienced in yen terms for their silver. Their currency is in free fall, and this is where you want to be when that happens. This is what is happening in the physical silver markets. We go once again to the First Majestic Silver Store, my favorite place to get cheap bullion. But look at this. Everything, 1 ounce silver rounds, sold out. 1/2 silver rounds, sold out. 100-ounce silver ingot, sold out. 5-ounce silver ingot, sold out. 100-ounce proof strike silver medallion, sold out. 5-ounce proof silver strike medallion, sold out. Everything is sold out, even 100-ounce stacker bars, everything. They've got nothing because silver price is not attuned to physical silver for investment purposes. It is only attuned to silver as an industrial commodity, which is why silver coin premiums remain elevated at above 21%, 21.18%. This is, of course, a silver squeeze high, a post-silver squeeze high, and these premiums should keep climbing higher even as the spot price continues to climb. Now, here's some more perspective. We have here, this line is the silver price, and these candles are the US dollar index. You can see here that the dollar index has risen from around 89.6 to 102.6. And usually when the dollar rises versus other currencies, silver gets destroyed. This time it is not. It is maintaining its trading range. There's only a matter of time before the dollar index reverses itself. And once that happens, silver gets a tailwind. And finally, if we look here at the futures tables on the CME website, you can see here that yesterday, spot silver in May closed above June silver 1 month into the future. Silver is back in backwardation slightly, which is another signal of a physical shortage, which you've already seen in the bullion stores and the high premiums. And so think of it this way. Who is complaining about this silver sell-off? Is it the stackers or the traders? Yes, if you are a trader and you trade in ETFs and other silver derivatives, then your portfolio is down. And some of us have some of those losses on paper as well. But if you're a stacker, are those the ones that are complaining? No, because they're buying until stores get sold out and then some. Premiums are elevated above 20%, which means the physical buyers are stepping in a strong way. They are not complaining, they are buying. Bottom line, my friends, is this. The Fed is within months of a major reversal. it looks like we have around 4 to 5 months until the zero bound in monetary inflation is crossed and the Fed is forced to reverse its tightening stance and go into one final money supply splurge. Silver rallies come quick, they come fast, and they do not let people hold on. When it comes, we will all know it. And at this point, I believe we are months away. This is Rafi of the Endgame Investor with this week's Silver Report for Arcadia Economics. Hang on tight.